Well, I was up $1,000, but maybe I guess I should have took the profits, huh? All right, so let's see. Let's see. I should have took the profits on this one, apparently. Maybe it's an opportunity to. What was even the right decision? They dropped this thing like we didn't even get a right. Mm. No. Keep me in. Keep me in. Ah, shit. Ah. Ah, man. Ah. Damn it. Oh, if you're gonna pump this shit now. No. Oh. Okay. All right. Whatever. All right. Mm. No way. No way. No way. No way. This thing literally chased my stop. Man, get out of here, dude. Damn it. All right. Man, this thing literally dude, no fucking oh my god. Oh my god. Oh my god. Oh my god. This thing literally chased my stop just to pump. No, 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 no. Oh my god.
Oh, is he on the podium yet?
Oh, hold on. No, 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 no. All right, ES, I'm breaking up with your ass. I don't have to tolerate that shit from you. I don't ever gotta tolerate that from her. Yo, she literally chased my stop. No, it pumped. No, no. Oh man, that is crazy. That is crazy, man. Hmm. Damn, she chased my stop. Damn it. Yo, Smith, she literally like, dude, she chased my stop, and as soon as I was good, and dude, no, no, no. All right, let me see if I can find this damn. Let's see if I can find it. That is some crazy shit, dude.
Well, she took me out. Should have took profit at that. I was literally long the bottom,
Mm-hmm. Me too.
and we got that dump before.
Yeah, me too. I was up like literally $1,100 just now, and yeah.
And 2.5% now.
Dude, she literally stopped me out there at this bottom.
The median projection falls to our 2%
Purple tie
objective.
too.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while establishing further progress, enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate,
Albert said you gotta turn in your bear card.
the evolving outlook and the balance of risks. We're not on any preset course.
Hey, I missed it. Only because I was long from like
projections,
hours
FOMC
ago.
participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year,
fill my target
and
first.
3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals.
Oh, come on, dude.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does it pause?
Hopefully they don't have to come back down here
likely?
and hopefully.
So let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks.
Until after
on balance, we decided to go ahead with the further option. I'll give you some details on why.
I'm sure.
Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further. So far, in a gradual and orderly way.
I'm just going to put my stop down here.
Cooling in the labor market.
I mean, if I get a daily loss limit, then I'll just get it.
Job creation is
I know that this is going to
well
probably be a
below
lot tighter than I probably
level
want
that
it
would hold
to.
unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped.
Or shit.
And we've had recent readings from non-market services and some bumpiness for goods. So
you said 228 is a support level?
So remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace
we double bottom here.
Adjustments. You ask about 2025.
Why did you short?
I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the S&P that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts?
Oh, now you want to drop?
What would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question,
send it, Powell.
in the December SEP, which shows a median
we call on the Powell,
down 2 cuts next year.
The power of the Powell pump.
Howard Schneider with Reuters, and thanks for the opportunity to ask your question. So this does seem towards the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy in part.
Damn, JC talking about he's scalping. 10 points, 10 cons. Let's go, baby.
Over the year.
Let's go.
A data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting
damn, dude. Damn. JC says he's up 5,600 in his live account.
Point to 5 or 6
congratulations, dude.
And let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger.
Actually,
right?
okay, hold on.
Grew faster in the
I'm probably getting this in my ES
2024
account or my swing account
so far than we had
I think this can probably,
and is expected to be
let me look at this real quick. Let me look at this.
September next year as well. Unemployment is lower, and
because I mean, if we get the
SEP, you'll see that.
I mean, we just completed that rotation down. Remember, CBI saved us from that, and now basically
that's more strength, right? Inflation is higher, as we talked about. Inflation
Powell basically rebalanced this area.
Next year.
Powell basically rebalanced this area.
We're closer to the neutral rate, which is another reason to be cautious about further moves. And but then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people. The way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts.
So now that Powell basically rebalanced his area, we can probably see a mega pump.
Some people didn't say whether they did or not. So we
can see a mega pump from
here. A bunch
here.
of different approaches to that.
Unless they break this level,
some did
I mean,
identify
we're going back
policy
to at least
uncertainty
640
as
on the
one of
December
reasons
contract, but
for
let me
their-
actually just switch this over.
They're writing down more uncertainty around inflation. And, you know, the point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down. And so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th at the time. Is it fair to say
Short this
that's
scam.
what's driving the higher
No,
sense
long
of
this
upside risk on
scam.
inflation?
Lock
Actually,
it.
that's not the only thing. What's happened is that our forecasts for inflation for this year,
Look at that
I
spread
think,
on
are
the thumb. This
5/10
mess is
higher than they
going
were in
crazy.
September.
Mm.
So you
Don't know what to do.
had 2 months of higher inflation in
Back and
September and
forth.
October. As I
Short
mentioned,
this
November
scam.
is back on track. But you know, once again, we've we've had a year-end projection
200%.
for inflation, and it's kind of fallen
Damn.
apart as we approach
I mean,
the
if
end of
we
the year. So
if this thing could just
that
stay
is
away from
certainly
this
a
low and just
large
pump,
factor in people's
that would be
thinking. And
awesome.
I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, you know, going to be
Short
between
this
2.5 and
scam.
3. It's way below where it was,
you
but you
turned
know,
it
we
on?
really want to see progress on inflation.
Thank you.
To,
Target
as
number
I
1
mentioned,
hit.
as we think about further cuts, we're going to
No.
number 2 inflation have been moving
Damn.
sideways on 12-month inflation as
And,
the 12-month window moves.
21,900.
Because
Actually,
inflation was very, very
913.
low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further
now I got to
progress
gamble
on
in the
rate
Apex
inflation
account.
and
Man,
keeping a solid labor market.
It's charging. Let's let it
Thank
charge.
you, Chris
okay?
Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as they were one-time increases and
21.9.
expectations remained ankered. Could you comment on if that analysis remains
Actually, we got to
effective
take into
and any other
consideration
thinking on tariffs generally
the
that you could share?
percent. No,
So I do think that the September 2018 Teal Book alternative simulations
It's
are a
only
good place to
1.5%
start. I haven't
now
brought them here with
on
me
the
today.
Nasdaq.
I'm sure you have them too. They're a good starting point, and I would just say, you know,
Technically.
it's 6 years old analysis, but nonetheless, this is still,
like
I think,
4 more
the right
percent to go.
questions to ask. And you know, there were 2 simulations. One was seeing through, one was not. And I'd point you to, there's some language in the see-through paragraph that says, you know, that considers situations in which it might be
21,913.
appropriate to see through inflation and name
21,913.
some conditions that in which it might not be. In any case,
Hey, we
this
just
is not
ran
a
through
question
that.
that's in front of us right now.
That
We
previous
won't face that
demand,
question.
the light
We don't know
demand.
when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work, all of us have, each of us has.
21,913.
And, you know, it puts us in position when we finally do see what the actual policies are to make, you know, a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Do you, given the recent bout of inflation that we've been through with consumers seeing how, you know, prices can rise and businesses seeing that they can raise prices, at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is
Sick butt out my face.
there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And you know, so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be you know, retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment.
That's my
but
fault.
only when we've actually seen what the policies are and how they're implemented.
Wow.
And, you know, we're just not at that stage. We're at the stage of doing
what I did wrong.
Other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Stupid. That was stupid, dude. That was really stupid.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling so far in an orderly, gradual way. But it's also something we need to keep our eye on.
That was stupid.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past.
Trades undefeated, baby.
The committee thinks maybe it's going to be on hold for a while.
Trades.
And they said, gee, this looks like it could be the last rate cut for some time. Would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the
all right, JC, I'll look out for your email.
About as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And, I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike. Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
Short this scam.
The rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are
you see that it's shorted right here at this golden zone right here on my chart.
Rates do.
It shorted right at the golden zone and popped right at the 23%.
But we look at
so it seems like the Nasdaq likes to bounce between the 23% and the golden zone.
you know,
You can
most
see it kind of
forecasters
stair step
have
this
been
way
calling
down.
for a slowdown
Bounce
in
at the
growth
golden
for a
zone,
very long
rejected at the
time, and it
23,
keeps not
bounce at
happening.
the golden
So
zone
we're
again.
now well
The 50
into another
EMA knocked it
year of
right back
growth that
down to
looks
the
like it might be
23,
2.5%.
and then it went right back up to the
Third
golden
and
zone.
Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase "we need to have confidence."
I mean, the only thing that made me happy today was my Bitcoin short.
Our target.
Man, that's the only thing that's been. She's the only
forecast
instrument
for
right now
next
that's
year.
been keeping me happy today.
Do you have confidence, or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and you know we made.
She's like the only one.
Broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that. We have been for headline inflation. So I would say I'm confident that.
Shoot, I've already made $3,300 on Bitcoin just shorting it.
About why it's come down and why that portends well, and I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about.
I guess I should have been shorting the Nasdaq too.
Quite steadily at a slower pace than we thought, 2 years ago.
I guess I should have took my profits here.
Steadily coming down as market rents, start to equilibrate better with. New leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services and market-based non-housing services are in good shape. It's non-market services. And those are services that are imputed rather than measured directly. And they don't. We think they don't really tell us much about the
913.
About tightness in the economy. They don't really reflect that.
913. Give me my target.
Services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%.
Give it here.
So it's not a source of inflation.
Give it here.
Not to say that regional and particular professions where labor is tight. Overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on. And, our policy will do everything it can to assure that that is the case.
Colby.
Give me my target.
Thank you, Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front? Or
I think we might get a bounce.
There being more upside risk to inflation
probably around
needs to be
here.
accounted for?
mean, we're coming back into, yeah, you see that little. Let's see what happens here.
In July, 4.2%. It's moved up and down, but it's now the same as July.
It's trying to
target.
Job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant. But it's
actually
so
not
far
the rate.
below. So you might if we have the break even level right, and if jobs continue,
because ES is about to go into an area of support,
in the establishment
of previous support. So I'm thinking that the Nasdaq might see a bounce too. Okay.
Declining. We
Now let's see if we see that reversal here.
So you're right.
Actually,
I read out some of the reasons. We do think the labor market is still cooling.
880
measures,
maybe
and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants.
There we go, baby. There we go.
Thought that the risks and uncertainty had improved relative to the labor market, and it's because of it.
Damn, dude, like
things
shit.
have just gotten a little bit better. It doesn't rate flat and things like that.
Don't fall for it. It ain't time yet.
If the idea though is that no additional kind of softening in the labor market is welcome,
that's what I'm talking about. Bitcoin, you always make me happy, baby. Target filled. Yo, I'm about $3,600 in Bitcoin, baby. That's what I'm talking about.
2% inflation. That's what I'm saying. It's not welcome.
That's what I'm talking about. You said what?
If you had a situation where inflation is moving around by a tenth every few months,
you said what?
We'd have to wait.
I hate you, Prophet, dude. You Prophet, I hate you.
In recent months,
dude, what the fuck, man?
In the 12-month window.
Yeah, I hate you, Prophet, man. What the fuck?
At this point, for a while there, we were only really focused.
It didn't fill my order on you, Prophet.
On inflation, we've now gotten to a place where the risks to the two are we think are broadly, roughly in balance.
Put my target at all.
And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over.
Zero payout.
What you might
call this new
phase, and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase.
All right, so I think the Nasdaq is,
but we may get around to that. But no, I would say we are that.
Watch out.
The Nasdaq is in an area. You better watch out. So, well, you're in the sim. I mean, I'm in the sim too. Battle of the Sims.
Our policy rate by
Battle of the Sims.
It is in that area. I give it to y'all. No, it's in that area. But I don't care. We shorten, baby.
And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points. And
so let's see.
That's a good thing. I think
I'm sure target filled.
We are in a place where the risks
the sim is undefeated.
I'm sure.
And that's how we're.
I'm going to go right back to the ES. I'm going back.
Going forward, obviously, we're going to be moving slower, which is consistent with the S&P.
Wonder if I can ask you how much you are looking through some of the high numbers we've had in the recent inflation.
Stop slapping me. What's wrong with you?
Cars being up maybe because of the hurricanes. Eggs.
All right, give me my 300% target now.
Kind of stuff, and then looking forward perhaps to housing
300%.
Inflation coming down as it did in the recent report.
Dang.
So we always.
This is only down.
Not throwing out the numbers.
Not even down.
Oh shit!
Occupational hazard is to look. Those high months are wrong. What about the low months? We've got
only down
a very low month potentially in November.
Almost 2%.
It's estimated by many to be in the
3% more to go. If it's going to do a 5%, they're going to let it go that far.
We try to look at not just a couple or 3 months. We shouldn't
5% move.
Position should be like change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month. I think this 12-month headlines 2.5. Core is 2.8.
Man, this thing is a scam, dude.
we still have some work.
This thing's a
Is
scam.
that we're looking
Man,
at,
this is
and
a
we need
scam.
policy to remain restrictive to get that.
This is a
to get that work
scam. No.
Give me my 300%. Give me my 300%.
Financial markets have been very buoyant really all year.
Yeah.
The committee comes up with what the implications are, or do you see a risk that loosening
Man, this is a scam. This is a scam.
So we do look carefully at financial conditions, of course. That's part of what we do. But, you know, what we really look carefully at is the performance of our,
I wish that was a real
variables. And
No,
how
it
they
wouldn't have
affect
worked
the
if he was in a real
economy.
account.
So what we've
It
seen
wouldn't have
over the
worked.
course of just take the last year.
You're right.
Okay,
We've
this
seen
gotta be it
inflation,
right here.
Well, over
This
the last
gotta
couple of
be it,
years,
dude.
come down a lot. We've seen the labor
move.
market
300%
move,
move, baby.
That suggests that our policy is
Oh,
restrictive.
but the longs,
We can
the
also
longs
look
are gonna
more
be so
directly
epic.
at
Yeah,
the
it's
Whoever this
dude.
decides
economy
to
that
turn
are
around.
affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's
God
significantly
damn, dude.
because
Like,
of our
dude, this shit is
policies.
just
So we think our
dropping.
policy is working, it's transmitting,
God
and it's
damn.
having
Oh,
our goal variables
I'm all
that we
out
would
for
want.
transparency. I'm all out of my
You know,
position.
a lot of things move
Damn.
conditions around, as you know,
move.
and we don't really control those.
300%.
We
This
see the
is
effects we're hoping to see
nothing
on the
but a
goal
scam
variables and
at this point.
the places where we'd expect to see it.
So if I may, speaking of
Yo, this is a
Ah,
scam,
been
dude.
buoyant,
This is a
do you see any
scam.
value or benefits in the U.S. government
I
holding
wish
a
I
reserve
had
of Bitcoin?
my life. I would have took it
So,
in there, but you're right. It
we,
wouldn't have worked.
It wouldn't have worked.
We're not allowed to
It
own
wouldn't have
Bitcoin.
worked.
The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider. But we are not looking for
Oh,
a
where
law
the thing with
change.
Bookmap chat at? Short this scam. Short it. Yeah. Yep.
Yeah, let me see. Let's read the chat.
Hey,
Dump this.
happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending. If you're confident that we've avoided
said
the
buy calls
recession
for
that,
Friday?
Forecasters were predicting as inevitable a couple
Where
years
is
ago.
SPY at?
I think it's
I would go
pretty
out.
clear we've avoided
Dang,
recession. I think growth
595.
this year has been solid. It really
Dang,
has.
SPY is at 5. Oh, shit.
PDFP, private domestic final purchases,
Talking about
which we
Bitcoin.
think is the best
on,
indicator. of
Bitcoin,
private
where Bitcoin
demand
at?
is looking to come in around 3%
Hold on, Bitcoin still
this year.
dropping? I mean, I
This is
still
a
got my
really good
position
number.
open.
Again, the U.S. economy has just been
Yeah, one of the
remarkable.
reporters
And,
asked a question about it.
it's-
Yeah, it's
when
still
in
dropping.
these international meetings that I attend, this has been the story. Is
Oh
how
my
well the
God, I'm
US
about
is
to get my
doing. And
target
if you look
hit.
around the world,
Bitcoin, you
there's
have
just
made me
lot
a
of
happy
slow
man
growth
today.
and continuous
You
struggle
have made
with
me a
inflation.
happy man.
I feel very
My
good
baby
about where the
Bitcoin's been
economy is and the
coming
performance
through
of the
for your
economy,
boy.
and we want to keep that going.
The other thing I just wanted to ask about was the
While all the other ones was stopping
you
me
guys have
out.
noted that the unemployment
My
rate
baby
is,
Bitcoin.
Is still low. However, employment rates have fallen.
Dude, look how
rather
much
quickly.
money
The
I made
prime age
just
unemployment
today.
Rate has fell
That
by
is
about
crazy.
half a point, 0.5%.
Was able
rather
to scale
recently.
into this thing, get some extra
The question,
points
I guess,
into it,
is, do
extra
you
money
think
in it.
There's maybe more downside momentum in the labor market.
And all
than
I
the
did was short
unemployment rate
Bitcoin all
alone
day.
is
I feel
signaling.
I feel bad for that guy that
I
was
don't think
streaming
so. No, I
Bitcoin,
think overall, if
and he
you
was
look
waiting
at
for them
it,
longs.
Prime age participation is still very high. What's going on in the labor market is
Hit that target, baby.
that the hiring rate is low.
that runner.
So if you have a job, you're doing very well, and layoffs are very low.
I think the
right?
first
So
one's
people are
free.
not losing
I
their
think
jobs in large
Bitcoin is going to
numbers,
keep doing
unusually
this
large numbers.
until I get real
If you are
comfortable
looking for a
trading her, and then
job,
she can be
though,
like,
the
nope.
hiring rate is low, and that's a signal of lower demand. It has come down. So we look for
Damn,
signs
I got
like
all my
that,
targets hit like
and
that.
that's
Shit.
clearly a sign of softening, further softening. I
Oh
didn't
crap! So that
mention it
means my
earlier, but
my other ES
I
trade is
think you can see an ongoing gradual
my other
softening
ES trade
in
is
the labor
good then.
market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment.
All right, so we
is
damn
very
near
low.
caught.
Again, participation is high, wages are at a healthy and ever more sustainable level. Wage growth, and so the labor market. This is a
typical
good
NQ.
labor market, and we want to keep it that way.
Typical NQ. So I mean, apparently this was a good entry right here. All my targets got
Bloomberg News. I
hit.
just want to put a finer point on the labor market.
Or
Can
which
you
strategy
keep the
was I
labor
using?
Market this way.
Yeah, all my
in the strong
targets
position that
got
you
hit.
have, described without further cuts. In other words, do you still view the labor market as needing support to protect against a further cooling?
Still dumping. Did your target get hit? I think your target got hit.
The certainty.
Yeah, all my targets got hit.
We think that our policy
All right, Bitcoin?
balances the risks
My target's all the way up there, like.
As between the two
Oh
mandates.
shit!
We think the labor market is and when I say it's softening or cooling, it's very gradual. Job creations are meaningfully positive.
I'm divorcing Nasdaq and ES. I'm with my one true love right now. I'm with my one true love right now.
If you take into account,
I just looked at the spot price, and the spot price is below your target futures price. So I'm like, I know that mess got hit.
So I don't want to overstate the downside of the because if the downsides clearly appear to have diminished.
I shorted the top. It got out at the bottom.
It's one of our mandate goals, and we pay
I love
attention
Bitcoin.
to it, and it's worth noting that it is
Bitcoin is my new love, baby.
Gradually
and that's the only reason why I kept those 150K you profit accounts so I can trade Bitcoin the way I want to trade it. We caught the top on that move, baby. Now, if I kept my full 15 position from top to bottom, let's see how much money I would have made if I would have held strong in that short. I made 36. Let's see if I would have held strong in that, how much I would have made.
It's proving to be more stubborn than you'd expected.
Hold on.
It breaks down into a long
all right, so I was short. I was short 15 contracts.
A little bit more stubborn. I think if you go back,
or no, I was short 11 contracts in the Bitcoin.
Many people were saying
then I added
this far down, we would have had to have
so I was in
high unemployment by now.
At the top somewhere. I was in like right here.
The path down has actually been much better.
Actually, I can look at my let me look at my my trade history
to have the unemployment
order
rate
history
remain essentially at its longer run natural rate, while inflation has come down from core PCE inflation has come down from 5.6% to 2.8% on a 12-month
my
basis.
original target was
that's a pretty good outcome. Why hasn't it come down?
Where was it at?
One reason is that just a technical issue around the way we calculate housing services. And
so I was short at 79.80.
Then market
79.80, 79.80. So I was up. I was short 79.80
2 years ago. So that's part of it.
79.80.
There are other parts of the story. But
so yeah, I was up. I was short in this area. This one I got in short.
Right
79.80.
The effect of high prices, not
all right, so
high inflation.
79.80.
So we understand very well that prices went up by a great deal. And people really feel that
my target got hit at
transportation and heating your home and things like that. So there's
my
tremendous
target got hit at
150 burst of inflation that was very global.
1575
in all the advanced economies at the same time.
1575.
So now we have inflation itself is way down, but people are still feeling high prices.
79.80. You call like 7,000 points, almost
the best
8.
we can do for them. And that's who we work for.
I know. Bitcoin is my baby. I just know she's just so easy to read. I would have made I made half the money. I made half the money I would have made
real wage increases
if I stayed strong.
Wages are going up.
In my from top to bottom, 7K. Let's fucking go. I'll take my 3,600 though. I'll take it.
Good feeling about the economy. That's what it will take.
You profit fucked up. They ain't gonna pay me though. It was like, nah, we're not paying you. You made it unfair for other market participants that trade Bitcoin.
Very good about where the economy is.
But Bitcoin filled that gap, so we could see the market move up.
It's we're in a really good place.
It's probably another good area to short it.
I expect another
this
good.
This thing's still dropping after a 300% move.
Damn.
Thanks, Chair Powell.
Damn.
For the questions. Edward Lawrence from Fox Business. So you say that we're close to the neutral rate.
I just got stopped out of my other position.
And the committee believes. Where is that neutral rate?
So I'll say a couple of things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance.
So now you're
probably
definitely not paying.
And no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy
That's what I'm
stance,
talking
and we're
about,
looking
baby.
at the way it's hitting the economy.
I mean,
we look at the effects.
I took a $600 loss on that other position though,
employment
which
and price
sucks.
stability.
But you know,
and
whatever.
the answer can be there are things that affect the economy that are lasting, but
this
not
thing is
permanent.
just dropping.
And the ones that are permanent are the ones that would be in our star. The ones that
you see the CVD on Bookmap
over time, they could actually affect
negative 4,000.
Technically,
yeah, I'm looking at
neutral
it.
Stance. I
wonder how the ES is looking now.
We're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And
This thing, all I know is the pump is going to be
100
epic.
basis points closer to
I'm
it
trying
right
to catch
now.
It's dropping like this.
There are many estimates of where that might be, and we know we're a lot closer to it. And
yeah, dude, on the ES, dude, I should have looked at the ES before I took that long.
Phase, and we're going to
dude, have you seen that? So you see that heat map that he has on top of the ES chart?
Markets are looking for
dude, the whole market is red right now. What the fuck?
2.9% to 4%. I think the markets would like to see a little more.
You see it on thing with Bookmap?
18 months out as to
the whole heat map is red up.
For lack of a better term,
the entire thing.
It looks big.
Yeah, I mean, honestly, there are.
It's negative $34,000. I mean, negative 34,000
empirical models
on the ES CBD.
There are things that combine them, and they have as many different answers. As
yeah, JC, I saw it.
Certainty, and I mean, it's actually a good thing to know.
And so, so this is the program that you use, JC?
To think, I think this model or this estimate is right. You just have to be open to, the empirical data that are coming in, and also how it's affecting the outlook. And it's not any easier
Tesla
by the
dropped
fact
26.
that, that our policy works with long and variable lags.
Oh shit!
Nvidia is still positive. Shocking. Surprisingly, Nvidia is still
it's
up
appropriate
$1.
for us now to proceed cautiously. Now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape. And these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Hi, Victoria Guido.
Ain't nobody shorting the sim to get better entries in other accounts. I'm talking about Bitcoin.
Progress on core PCE counts as progress on inflation.
I'm trading Bitcoin in my UProfit account. You talking about I'm trying to get better entries in my other accounts.
Since that's what's projected in the S&P, I was wondering what accounts for that. Why do you all see core PC going down?
Yeah. Hey, in the mortal words of Gangway, hey, if you add me again, I'm knocking at your door.
I imagine the goal.
You add me again,
because that's what people experience. People don't experience core inflation; they experience inflation, and that includes food and energy costs. So that's the overall goal. But
I'm trading Bitcoin in my UProfit account.
Headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So that's it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down, but headline potentially ticking up?
So headline can be affected. You're talking
man,
about
that's
next
crazy,
year.
man.
Mm-hmm.
Yeah. So headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because
damn, look at that big dildo candle down,
which is a great thing for people, but energy prices will come down. And
we haven't seen one of these candles in a long fucking time.
Anything about how tight
God damn, look at that hourly candle, dude. That's crazy.
Will perform.
Do geopolitical risks factor in at all to how you're thinking
about
it?
Well, this is the December contract.
Really quickly,
and
wow, really carefully rather. But I would say.
So we know that
so far those risks haven't really. Nothing has come out of those risks that has really.
Yeah, Alfred, I'm gonna probably buy some SPY calls right now.
You would look to is the price of oil, given that we're talking about the Middle East and Ukraine, and but
let me see how much they cost right now before Powell get done talking.
The kind of thing that could go wrong with global turmoil. But the price of oil's been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. Partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't overreact
Target
to a
hit,
couple of months
baby.
of
I
higher
can
readings.
7,000 points on the damn
we had was September, we had 4
Bitcoin.
months of really nice readings, and then September.
And I was short, baby.
But then November is much
You said
lower.
what?
So I don't really think
what we
the
looking
public
for
is
on these SPY
experiencing
calls.
that as
I'm looking
a
at it right now. I'm about to look at it right
surprising
now.
Risk to inflation. I think
We might
inflation is much lower.
Yo, if we can
what the
get
public is feeling, and they're right about it, is that prices are just the price level
because
went
that it
up
just left
because
that
of
range.
the past inflation. And
So
it's
we
going
can
to take
probably
some
see a whole
time
slingshot.
for real wages to recover over a period of years.
You can probably
in
see a
which
whole slingshot on
your
this.
Real
What is the
compensation
all-time high
growing.
on SPY right now?
In other
610?
words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now.
Like that,
and we just want to hold on to it. That
We can see
process
a
will
whole
probably
range
take some
rotation right
years,
now.
But that's what's going on
All right, so
now.
610.
And I don't think that
I think we
months of
man. Let me look at these 620 calls, man.
That
Let me look, well, let me see. Let me look at them real quick.
And just one follow-up.
This ain't financial advice,
You
obviously.
previously predicted
Shit.
hitting the 2%
But let's look at these SPY
inflation
calls real
target
quick.
in 2026. It's now been pushed out to 2027. You said you're focused on enabling
Because I mean, we could see
progress on
more downside a
inflation.
little bit
That's
going
not
into
necessarily
tomorrow for
progress in the
sure.
right direction.
But
are you confident that target
if we can
isn't
catch
going to move further out?
a pump,
we're talking about when you're projecting the economy, 3 years out, 2 years out.
all right. So
you're talking
Friday
about
is
high
the
uncertainty,
20th.
Very high
Let's get some 2-day calls and let's see what they're looking like.
At that point, it's
Bro,
not,
like, yo, okay.
It's not possible to confidently predict
Alright.
where the economy is going to
Because
be.
I mean,
in
I
3
doubt that it'll
years.
get there
So what
tomorrow.
we're doing is we're looking at what's
Man,
happening now.
I
We're
doubt
kind of
it.
projecting
I
that
mean, unless GDP
the
is
same
just
kinds
like
of things
super
are
great.
happening. So we keep a strong labor market.
Yeah, you don't want to
housing
buy.
services inflation comes
So you got to
down,
buy
goods and
Friday
services-
calls.
Goods inflation
You
settles
don't want to
down,
buy calls
and,
for tomorrow because even if it goes in your
non-market
direction, it'll
services
expire.
return to their prior level. All of those
Worthless.
things should happen
Unless you're
over
buying
time.
at the
and,
money.
And, those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower.
All right, so
than
if we
had
see a
hoped.
pump,
Nonetheless,
we can
we're
get
still
back
on
up to
track, and,
605.
I think if two
we
years
see a
ago, you'd
pump,
said
we can
were
get
at
back up to 605 before
4.2%
Friday.
Unemployment and 2.8% inflation.
If you want to be cheap about it, we can possibly see 610 again.
Interim place to be.
610 calls on Friday right now
But I think
are
we're feeling
$15.
good about where we are and where we're headed.
Go to Nancy for the last question.
605 is $50 right now.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways, appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and
I think I'll buy 607 calls on Friday for $30. I think that's fair value.
We will achieve that
because everybody's going to be expecting a pump, right?
You have to be. We are making
so that means everybody's going to probably try to short it to fade
we'll continue to do
the pump
and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think
no, we're going to blame
it's a
gain weight.
Well-calibrated rate for us to
we're blaming
continue to
gain
make
weight.
progress on inflation while keeping a strong labor market. So,
damn, Alex Stream went down again. Ah, shit. Okay, all right. I'm tripping. The Powell pump. The Powell pump. Ooh, what the fuck? Okay. All right, so we can get like a decent position on the ES because, yeah, I think this shit's going to keep dumping. Because, I mean, the Powell pump should have happened if it was going to happen. So I think we're going to probably see a reaction. Actually, that's looking like a straight up head and shoulders pattern. We'll see if this holds. That's looking like a straight up head and shoulders pattern right there on ES. And on the Nasdaq, I mean, so the bears tried. I mean, we're definitely trending down. The bulls did shoot it up, but then the 50 EMA knocked price right back down. But this looking like a head and shoulder. This look like a strong low right here. And JC said 758. Yeah, 758. Yeah, that's close. Nah, Gangway, you ain't figuring nothing out.
That's funny. All right. What's tomorrow? Friday.
All right, so the volatility died down. So now, yeah, these calls are starting to come down. Yeah, because 605 calls, you would have lost $20 just like that. You would have lost $20 because they was selling for about $50, and now they're at 35. 610 calls are, I think. So what I'm probably going to do is probably buy calls at the end of the day, if the price is right. But I mean, if this shit keeps going down, I mean, look at this scam dumping. Look at this scam. Dump this scam. Dump it. Look at this scam dumping.
Oh, baby. First TP. And this mess might go, NQ might go to 700, to be honest.
03-25.
I got 702. I'm going to bump it up to 710. 710 target.
And 21.7. Oh shit, we already passed by that level already. Oh, did we? Hold on, is this right? Obviously it can't be because we're at 20. Why is the price different? I was about to say, like, why is the price different? I didn't switch over yet. Okay. All right, let's see. This is one of the levels that JC shared with us in the chat. And let's see. Well, we had fun. I blew both of my I didn't blow them. I had daily loss limit on both of my accounts, even the one that we made money in this morning. I thought we did get a bounce. I just didn't take the profits. I thought we was going to get a better thing than that. Well, thought we was going to get better than that, better than what we got, but we ain't get it. So,
dang, bro, my target gonna get hit. Is my target gonna get hit? Just like that?
Just like that.
I mean, I bumped it up to 710.
Okay. So we'll see what happens towards the end of the session. I'm gonna keep looking at this chart and seeing if I can find me an opportunity to get into something. All in all, shit, my Bitcoin trade was beautiful. Man, we caught the top and bottom, baby. I love that. I love Bitcoin. I love it. I think I love her. Sherm, you don't love me. Sherm, you don't love me. I think I love her. Oh man, hey Smith, you got to come over here to heaven, man. You got to come over here where bears get treated with nothing but respect. Nothing but respect, baby. Look at this bearish move down. Just imagine catching this. You know how high I am right now? You know how high I am right now? Catching this move from top to bottom like this? The only reason why I keep the zero payout account. The only reason. And dude, yeah, okay, so all right, actually, so this is probably what I'll do. This is what I'll do. I'm going to have one, so I'm not going to trade either. I'm just going to trade Bitcoin in both of these accounts. I'm going to use one account to long and one account to short and see which one makes the most money. We already should know which one will make them the most money. But Bitcoin did come into an area of demand. Phil said he just got margin called on a paper account. How did you manage to do that? How'd you manage to do that? Dude, if you get... That's funny. All right, so those 605 calls that were once $50, they're now 30. Or now they're about 25. I'm about to probably buy these. I'm gonna buy these. I'll just
filled, baby.
I'll buy these.
7:10 on the dot. Target filled. How you get margin called on a paper account? that is funny.
Okay. Make sure I ain't doing something foolish right now. Well, I would say that was fun. That was definitely fun. It's always fun gambling Powell, but we didn't get the Powell pump. I guess the whole thing before was the Powell pump, which was not fun. Yeah, I'll just put nah, I'll just put $30 in this account. 'Cause like I said, I necessarily don't want to get back into trading options anyway. But I don't want to miss this opportunity to go and get some money in SPY. So I'll do it. Why not? All right, so make sure I'm in the right account. I'm definitely going to buy these Friday 605 calls for like $25. I mean, it could keep going down. Bitcoin is still dumping. Or I could... All right, so let me look at SPY real quick. I mean, let's actually just before I'll probably end the stream in like in the next 5-10 minutes, but because I have to get back to work. Okay, so we'll see what happens if before the end of the market, because we could see a bounce. We could see that bounce right there. Or not. You know, actually, I might wait until tomorrow. Because now that I'm looking at this on the hourly chart, we had a nasty breaker structure. We had a nasty breaker structure to the downside. So actually, I think, let me see how these puts looking. I'll go long on SPY probably tomorrow. I want to see what happens when it gets into that range between 585. I want to see what happens because we might not even get a pump tomorrow, the way that this thing is looking. Because this nasty breaker structure to the downside. We broke the 200 EMA on the hourly chart. We do got GDP in the morning. Does GDP save the market? That's the question. And then we got PCE on Friday and option expiration. So if the majority of the market is long, oh shit, SPY. Oh, okay, never mind. All right, I wouldn't recommend going long. I would wait. SPY got this big giant ass gap to fill. Once price gets down here to this gap and fill it, then I'll go long. Actually, where's that at? 75. Let me see how many 75 puts they cost right now. Okay, so 75 puts cost $60. That's too expensive. That's an eval right there. Yeah, dude. Yeah. This might not. Hold on, Till, did you actually really get serious? No, you hold on. I thought you was playing. Did you seriously get margin called in your paper account? I thought you was playing. And I don't know if that's possible. Yeah, because SPY did the same thing that the Nasdaq did. It halfway filled this gap, and then all the bears that thought like, yeah, it's going to fill that gap, they got clapped. And so they might actually come back down here and try to fill that gap first at 76. So if we see a gap fill tomorrow, I'm going long. I'm going long tomorrow. Overnight. If we see that gap fill overnight. So JT says 4-hour candle only shows. Let's look at the 4-hour candle real quick before we're done. Yes. Well, even on the 4-hour, like that 85 level is also support. You still got that gap to fill. I mean, they filled this gap already and then they bounced. I mean, they're definitely going to try to fill that gap first. And then the 200 EMH right there at 76 too. That's not a coincidence. All right. So, I mean, are we going to play a gamble? Let's gamble, I guess. Let's see if we can get this. So let's look at tomorrow's expiration. Oh yeah, never mind. They got it covered for whatever reason. They know. Even a 1-day expiration, they got the 75 strike at $30. That's expensive for a 1-day contract. That's going to be 0 DTE tomorrow. That's expensive. Yeah, so I mean, they got it covered. They know. They got it priced right, unfortunately for us. Oh shit, hold on. Oh, whoa. What the fuck? Whoa. Man, did something just happen? Damn, this shit is still dropping. Damn, this shit is still dropping. Damn. This shit is still dropping. Damn. Yeah. Well, I guess this is the first time that we got the Powell dump. Wow. The Powell dump. Okay. All right, people. Appreciate everybody that joined. I guess the market is trying to, rebalance, whatever. And going short. What's the play? Interesting. look at this sell-off. All right, so Oh, okay, well. So that means that damn. Shit, everything's selling on. Well, I guess I didn't catch the bottom on Bitcoin. Good thing I didn't go long on this. Damn, okay. All right, well, we'll see what happens, man. We're about to come back into a golden zone that I had drawn out for the Nasdaq. We'll see what happens at the zone. Yeah, we'll see what happens here. If you see a reaction when price taps into this level, we'll see. Yeah. Hey, what's up, Mohammed? What's up? Damn. All right, well, I guess we'll see if this area holds up, then we'll see. We'll see if this area holds up. And see if the price will run right through it. He said Powell didn't cause this move. He said the market missed it. They was waiting. They was waiting to clap that. Well, you can't tell me that these golden zones don't work. You can't tell me they don't work. You can't tell me that they don't work. Clean entry too from the golden zone. Clean entry. Clean entry. This golden zone is definitely an area where the market definitely has money at. Yeah, dude. Yeah, Mohammed. Yeah, we was thinking about buying some calls on for Friday, but I'm second guessing that now. I'm definitely second guessing that. I don't know if I should buy calls on Friday. I mean, 605 calls right now are selling for $20 right now. 605 calls. You say everybody bought calls throughout the week? I mean, shit, I can imagine. I mean, this whole weekend last week was just complete madness. It was, if you weren't buying the high and selling higher, you was getting clapped, trying to go short, trying to trade professionally. And the shorts were quick and sweet. And if you didn't get out of your shorts in time, you got bent over and clapped again. So it was like, yeah, the bulls are very aggressive this week. They were definitely very aggressive. But with this Powell dump, market makers like, yeah, we're going to use Powell. Everybody's going to think that's going to pump. So we're going to dump it on their ass. I mean, because we usually get the Powell pump. But the Bears got it this time. The Bears won. They got it. They don't like it when people say market maker. Yeah, remember Mohammed. Remember when the market maker is in pain, or they use the news to dump it or to pump it. And like if everybody's on one side of the market, then the market maker is forced to go on the other side, and they usually use news and stuff to dump it. In this case, dump it because everybody was in calls. Yes, that's why he shorted. Yeah, because everybody was in calls. I mean, yeah, we talked about it. It was like, man, everybody's thinking that it's gonna pump. I mean, it usually does pump. I mean, maybe we see a Actually, let's look at the footprint chart on this one. Let's look at the footprint chart because I'm interested to see what that's going to say. I'm very interested to see. Like, dude, look at all that selling, dude. That is crazy. Look at all that selling balance. Honestly, I thought it would be a lot more. Yeah, that's definitely a lot of selling. Yeah, this thing can probably just keep on going. Like, I mean, this March contract, or my bad, for the ES, this March contract opened up around like 130, made it all the way to 183, and now is trading below 6,000. Isn't that something? Don't you just love trading the futures market? And this is why, if y'all joined the stream a couple of nights ago, this is why I was saying don't try to trade futures with a small account. Because anybody that got caught in this, if their stops didn't get triggered, if they were managing their risk correctly, this is devastating for a small account. Devastating. And outside of deleting the app, you are responsible for this when they margin call you. But if you delete the app, obviously I'm playing, but yeah. So yeah, futures is not for small accounts. Doing a small account challenge on futures is very dangerous. Now, if you're a small account and you're on the right side of this shit, I mean, yeah, keep on dropping. But price is definitely coming into an area of support. We're definitely in an area of support right here. Yeah. Yeah, Mohammed, I definitely listen, man. Not in the well, I listen in the moment. I probably won't do anything in the moment, but I do take in great information to use in the future. For sure. And yeah. Hopefully we can get back to regular price action. I mean, that would be awesome. Bitcoin is still going, man. Damn it, I should have held my short. I should have held that short in Bitcoin. Yeah. I should have held that damn short. All right, so we'll see what happens at the death algo, and then I gotta go. We'll see how the market reacts. It looks like they already bought it. Looks like I might have missed it. Yeah, it looks like they've already kind of bought this area right here on the ES. This area of support right here. Yeah, it looks like I might have missed it on the ES. Well, $20 calls. All right, let's see how this market reacts. I mean, that does look like a reversal pattern right here. All right. I mean, I guess that makes sense. What could the algo do that the market hasn't already done? Okay. Well. So Katie says that he got it going all the way to 300, huh? The 300. Let's look at that. 275 is last week's open. Yeah. Yeah. Resistance turned to support. Yeah, that I could see that. Yeah, you got this area of the resistance turned to support. So price could definitely probably dip down here. We got last week's close right there? I think this is last week's close. So somewhere in this area, we can definitely see the market react. I'm gonna keep my eyes at 420, around 420-ish. I'm gonna keep my eyes to see how the market reacts at this area. Because usually when we see a bullish move into a range, when price comes back into the range, the market kind of stays in this area for a while before it picks its direction. So I'll definitely pay attention to what price does in this area. Kind of like right here, bullish move range. It chops around and then it picks its direction. And then it came right back up into this range right here. And then it jumped right back up. So I want to see what they do when price comes back and revisits this area. But all right, guys, that's it for me. We'll come back later on tonight. Hopefully everybody was able to make money in this. Or at least if you were gambling in the sim. With that said, peace out, everybody.